Folks, welcome to a Contrarian swing trade review of our new symbol NLS, Nautilus Group. It is an extreme oversold stock, a true contrarian play. I'm going to walk you through the steps of how we like to trade these positions. So let's first talk about what contrarian trading is not. Contrarian trading is not catching a falling knife. It's simply not a strategy that is sustainable and consistent. If you are simply just going to take the counter position of the prevailing trend, you're going to go broke. The time to be a true contrarian, where you find a situation where you have an unsustainable downtrend or an unsustainable uptrend, and then you take an opposite position. But you need to have a rationale of as to why you are putting on that trade. And that's what I've developed over the course of the past 20 years. So let's talk about NLS. First, we're going to kick things off with a daily chart. And what you're seeing here is the why that we are interested. It's certainly not the fundamentals. I'll go to that in a moment. The attractiveness to the shares is based purely upon sentiment and the fact that the downtrend is simply unsustainable. Can it go lower? Sure, and it probably will. But the end is near for the sell-off. For those that are still long of this stock and you've been holding on to it for a while, that's somewhat of a good piece of news for you. However, I don't expect a sustained counter trend rally here. So please, if you're going to get involved with this trade, I'm going to be sending out an alert to members when I get involved with it. And of course, when I get out of it, I do not plan on staying long. We're going to get in. We're going to take hopefully a couple of points of a swing trade to the upside and then move to the sidelines. That's the name of the game. So let's go to the daily chart and discuss why I like it. When you take a look at the RSI, you could see that RSI is at 13.17, very oversold. Now, this stock closed out the day well below $5, and history has taught us through this style of trading that RSI can easily, on stocks below $5, go under 10 on RSI. So simply because you have RSI at 13.17, technically oversold, it can go lower. So let's not get lured into a false sense of security. Again, we're contrarians with common sense. So let's not forget about that. So RSI 13.17, it meets our criteria. Now, when you take a look at price action is still awful, okay? Today, we flashed a bearish key reversal, meaning they tried to rally it. The shares rolled over and closed right at the lows of the day. So the probability of a continuation move lower is very, very high, despite the fact that we have RSI at 13.17. This will not blind us. This will not lure us into a false sense of security. What else should have you concerned where you're looking to buy these shares is the fact that you have volume, which is well above average. So that's a concern. You have institutional distribution, and you don't want to fight these guys. So you need to watch these volume bars dissipate. They need to come in a little bit. Stokes, they're like a coiled spring ready to rock to the upside, but they're not ready quite yet. MACD histogram is improving some in that we are not putting in lower lows. We are now putting in higher lows on the histogram. So that's good stuff. So before we talk about when we would want to get involved with the shares, let's talk about when the market sent you a signal to get out. And in this case here, I have a quarterly chart, a monthly chart, a daily chart, because this is our multi-time frame view of the history of the stock. It'll also tell us where we may find support below. And it's at that support level where we will want to get long of the trade. Will I go jumping in with both feet? No. We want to build a position. And on each buy, each accumulation of shares, we send out an alert to members. So when should you have gotten out of this stock? The market sends signals back here. And as you could see, we had a head and shoulders setup, left shoulder, head, right shoulder, and a lower shoulder at that. And here is our 45-degree neckline, and we broke the neckline. So the market sent us a signal. Technically, it began sending signals back here in July of 15, then throughout late 15 into 16, given the topping tails on top of the candlesticks. We were not able to close at the highs of the month. We were failing. We were unable to break out to new all-time highs. That all changed here in September of 2016 when we did in fact break out. However, we couldn't hold the breakout. We flashed a bearish key reversal. This was exhaustion. This was a failed breakout. And when we broke down below this 45-degree neckline, the market told you, you had to get out. The path of least resistance was clearly now to the downside on this break after putting in a lower high. And here we find ourselves today. Okay? So the market sent us signals. Now, looking at the monthly chart, we have several support levels below where we may find support. We have already blown through one of these support levels. Now, this is a monthly chart. Maybe we'll rally back. We'll close back above it. You never know. I think that in all probability, we're coming down here to a two handle, the high side of the twos. And if that breaks and we close down on a monthly basis down below $3 per share, in all probability, before all is said and done, we're coming down to the low twos. So this is the range where we'll begin to shop around, looking for bargains, looking for signals that, you know what, perhaps the time is near to get that counter trend rally. Now, this is an ugly stock. What's going to cause the counter trend rally? Let's go over to Yahoo Finance. This is all free. So what you do here is you simply go over to Yahoo Finance under Statistics. NLS, the symbol is up. And you go over and you take a look at the number of shares short. The last reporting date was April the 29th, and we had about 2.19 million shares held short. Now, the 3-month average daily volume is 440,000 shares. Now, what we should see here is a 3 to 4 day short covering rally on NLS. And in that rally, that's where we want to begin to scale out of our position and book our profits. It has no quarterly earnings growth, doesn't make any money, doesn't pay a dividend. So nobody that's looking for a value is going to want this stock. It's a short covering play, pure and simple. Now, the takeaways from this commentary, folks, is that the key to making money from contrarian trading is to scale in to the trade. You want to see the shares hit historical support and then flash a bullish key reversal or a bullish engulfing day or perhaps a doji star formation off of support. And then you can begin to add more aggressively and build a sizable position. That'll set the stage for a short covering rally because the shorts right now, take a look at this chart. Look at all the money these guys have made. They're asleep at the switch. Now, I am convinced we are going to make lower lows here. Simply because I'm talking about this stock now does not mean I'm betting that it's going to go up tomorrow. Perhaps not even this week, but soon. There is money to be made here. So if you're not currently a member, sign up for the 14-day free trial offer. You're not ready, that's cool. If you watch this on YouTube, click that subscribe button. Leave a comment if you have a comment. And click that bell. You get notified whenever I put out any commentary. And that is it, folks. Everybody have a great night. I'll talk to you tomorrow. Be well.